Bob mentions the data we got today, including Chicago PMI, which came out a little early. Let's get to Santelli.
Yes, Carl, all the data points were really fascinating today. Let's start with the early ones. Of course, we've talked about ADP better than expected, and we also understand there's a disappointment because we haven't recouped all the jobs. But much of that isn't necessarily a function of the economy. It's a function of economies allowed to open or not and trying to control a disease that many are trying to work along with before, of course, we hopefully find a vaccine. If you look at the 749,000, it definitely is a nice number. We'd like it over 1 million. We'd like it over 2. If you look at Chicago released early, it was also a good number, but we forgot something. We haven't talked about GDP, and I like the personal consumption expenditure. We all know it's a favorite, especially the core of the Fed. And if you open this chart up, and that number started in 1959, it's never been negative except for this quarter. I find that very fascinating, and it was revised quarter on quarter from -1% to -0.8. The biggest, lowest number I found actually was up 0.2. Now, you see that on the chart. Let's go and look at Chicago. It happened to have been the best number since December of 2018 at 62.4 and well above the 3- and 6-month moving averages. As far as what occurred in our markets, the Mnuchin talk definitely moved markets. But if you look at boons on top of tens, they look exactly identical. That shouldn't be shocking. We're all trading basically stimulus anywhere around the globe. It's all fungible, just like the credit crisis. And finally, if we look at what's going on with the dollar index over the last several sessions, it basically lost a penny from high to low, 94.80 to 93.80, but it is stabilizing.
Shepard Smith here. Thanks for watching CNBC on YouTube.